Hello, this is Manesh Patel with IMTF Trade. Today is April 17, 2019. In this workshop, we want to go through and show you how you could do forecasting for pre-earnings stocks. And we're specifically going to take a live trade that we took, which is with KSU, and we're going to show you exactly what tools we use, what the thought process was, and what our probabilities were basically going into earnings and looking at it after earnings and so forth. Okay, before we begin, let's go for a normal disclaimer here to state this is for education use only. We're not soliciting you to buy or sell any particular instrument. If you do so, you're doing that at your own risk. All information is owned by EII Capital Group, cannot be copied or written without our written permission. We are broker neutral, but today we're going to use TradingView to show the charts. Let's go to the charts. So here's a weekly chart for KSU. We're sticking to the weekly time frame, reason why its earnings comes out quarterly. The weekly time frame, believe it or not, is the best time frame to sit there and predict what's going to happen with earnings. And the reason why is that the weekly time frame kind of gives you a forecast for 2 quarters out, and that's what you're looking for. Anything lower than the weekly, you could get a lot of distortions as far as forecasting is concerned for earnings. Okay, so that's why we're sticking to this time frame here. Okay, now if you look at it here, today was the day it announced earnings, so this is the week that announced earnings. And if you know options and you're dealing with options, you know the volatility starts to go up 2 weeks before our earnings announcements, roughly. Okay, so you know that options volatility is going to start to climb right here 2 weeks out. What I'm looking for is when you're sitting there looking at earnings, you're going out even about a month or so, you could sit there and look at it. So if you look at a month before, you will see that basically you're right here. You're below the cloud. You're in the cloud here. But the key critical thing is if you look here, there's an IMTF cross right there. And you can see how price respected that drastically here. And this was a support it broke to start the downward trend. So you know that's a major resistance here. So what we did was we marked that off over here. Okay, now everything here is very close to above the cloud, so we're looking for a bullish trade. But however, we cannot sit there and take that until we break this resistance here. And if you notice this week here, we broke that resistance right there. So once we broke that resistance right there, we're looking for it to pull back here, then we can enter a long-term trade. Okay, so if you look at the reward risk here, you're going to be looking at this type of scenario here where you're looking at a pullback trade, and you're going to look at this. Remember, this is weekly time frame, so you're looking to sit there and be a little more long term with this. You're looking to enter here on that following week here, since we closed above here, a pullback trade right there. And what you want to do is you want to make sure you clear that cross. Okay, now why do I like this trade? Well, if you look at it, you had an IMTF multiple time frame support here. The following week we had another multiple time frame support, and these crosses are multiple time frame supports and they're going up. That means the support is going up, and that's what I'm looking for. So my stop is going to be a couple points below that cross. I want to keep it very limited right here, and you could see here, and let me zoom in some here. Okay, and you could see right here, if I retest the pivot high right about here, I'm looking at little over a little close to 3-to-1 reward risk ratio, which is exactly what I'm looking at here. Okay, and that's what you're looking at here. So you could sit there, and if you get to that level before earnings, and we'll see if we got to that level before earnings by looking at a daily chart here. And you can see on the daily chart, you couldn't quite get there at all. You retest this pivot high right there, but you really didn't sit there and go to this level right there, which is the past pivot high, the highest point right there, okay, which is right there. You really didn't get that for earnings. So basically, you had to take this through earnings because you didn't really sit there and get to retesting this high here. So in our trading plan, if we had gotten to that high here, what we would have done is taken 50 or 75% of our positions off and tightened up our stop. Now, If we don't get to that and we're profitable in the trade, you have an option of exiting the trade. You could exit some positions of the trade and then let the rest ride, or you could be aggressive and just let it ride. We actually exited 50% of our positions here before earnings, and so we're a little profitable, not much, but little profitable going into earnings, and it's all due to volatility going up and also price movement going up. So we kind of got that little push there, so we were profitable a little and so forth. And then the rest of the positions, we'd let them ride through earnings, and that's kind of where you're sitting at right now. And if we close out our positions today based on price, we're basically looking at a 4-to-1 reward risk ratio here. If you did options, you know volatility is low right now. You kind of need volatility to come back for the next 2 weeks, and then it will equalize, and at that point you'll have the volatility back to normal, and you'll have those Vega dollars that come back. But either way, this right now is a 4-to-1 reward risk ratio as far as price is concerned. Okay, now the other tool that we used here is also, you could confirm it with another tool. So we sat there and went to alerttrades.com. Okay, and let me show you the banner right there. So we went to alerttrades.com, and Alert Trades, we went in. This is free. Remember, it gives you monthly seasonality. You put in KSU, you got April, 73% probability going bullish. And you could see last year was bearish, but you've never had any 2 years in a row that's bearish. So you had a high probability it's going to be bullish. And you know it's going to move an average 8.3%. Drawdown was 2.7, and 11% of the price action for that instrument occurs this month. So you know it's a high probability it's going to trend. Okay, so this was April, and now May. You look at May, you have a 62% probability being bullish. Don't like that because it's below 70%. And if you look here, it seems like it's alternating in patterns. 2 up years, 2 down years, 2 up years. So it could sit there in May, go down. Okay, so we have to be very cautious in May, could go down. Notice the drawdown. Average move is 3.9, drawdown is 4.4. Okay, so this is interesting to see. So you could actually see that maybe what's going to happen is towards the beginning of May until April 15th, it's going to keep on running up. And then after May 15th, it's going to sit there and probably go down, or something's going to happen. But you know that there's still more upside movement due to this drawdown here and this average movement up. So we really don't know what's going to go on. So we got to look at the charts here. And the charts here are showing that it's still bullish here. And quickly we'll go to the monthly time frame to see if there's any obstacles there, and you really don't see any obstacles there. So this has a potential to sit there and keep on going because it's at its all-time high here. Now a lot of Fibonacci, whoa, sorry, went to zoom out. So here you notice you're past here, so you're gonna sit there. You do have a resistance here, which is right about here, and you're roughly right there. That means you could sit there and take your positions off, or you could sit there and keep on riding it up until you get to this level right about here. And this is a great point right there of where things are stopping. And so this could be your target there, where you take the rest of your positions off, or you could sit there, if you're conservative, take the positions off because you're at this other point right there, which is also a major resistance level. So coming back to this trade here, if you sit there and you could take the positions off now, if so, you basically walk away with a 400% reward risk, or you could sit there and if you're aggressive, you want more, you could walk away with 475% reward risk either way. But so which one would you do? If you're conservative, you're going to exit the trade and walk away right now. If you're aggressive, you want that little more up there and keep on going. I'm going to stay in this trade here until we get to that level there, and the reason why is we have a multiple time frame support. I have no problems as long as we have that, and my stop is tightened it up on a lower time frame. So if it decides it wants to go the other way, it will sit there and take me out with close to, not a 4-to-1, but close to 4-to-1 reward risk ratio. If you have any questions, you could email us at here. Here's our contact information, so if you have any questions, you can email us here and so forth. Have a good day.